Greetings, everyone. I'm Dan Murphy. I'm Executive Director of the Masaver Ramani Center for Business and Government. We're the home for all things business and government at HKS and Harvard more broadly. So if you're interested in today's program, if you're interested in things like technology and regulation, digital assets, environmental economics, China's role in the world, et cetera, we do those things, whether it's teaching, research, policy, at the Masaver Ramani Center for Business and Government. So I hope you'll take the opportunity to join us, sign up for our newsletter on our website, follow us on social media. We would love to have you involved. And in fact, if you're one of the many students who are here today, we have a packed room. At 4:15, right across the hall, we will actually have a speed networking event with all of our senior fellows. These are folks with 20 plus years professional experience from a broad range of fields. I encourage you to take a look at their bios online and stop by to get to know them if you're here at 4:15 today. Today's event, let me introduce our speakers. I'll start with our guest, Yasheng Huang. He is professor. He's the Epoch Foundation Professor of Global Economics and Management at MIT's Sloan School of Management. And from 2013 to 2017, he also served as the Associate Dean in charge of MIT Sloan's Global Partnerships Program and its Action Learning initiatives. He is the author of around a dozen books in Chinese and English, and he is frequently featured in popular media, places like the New York Times, the FT, the Wall Street Journal, and many other publications. And I should say for myself, someone who spent 2.5 decades trying to understand China, I've often turned to Yasheng's writings, whether they be of the academic variety or in popular media, to help me understand issues. So someone who's a really widely respected expert. Joining us as well is Edoardo Campanella, Edo, as we affectionately call him. He is the senior global economist at UniCredit Bank. His most recent major publication is Nostalgia, the Politics of Emotion in a Fractured West. And like Professor Huang, Edo has published extensively both in academia and in popular media, places like Foreign Policy, Foreign Affairs, Project Syndicate, etc. I should add, Edo's work, he analyzes the global economy and also has a role analyzing the United States and China as it relates to the global economy. I am proud to say that maybe we've had some small role to play at M-RCBG in Edo's professional trajectory, and that he was a senior fellow with us and continues his affiliation up until the present day. I should also mention, for those of you who are here in person, we will be raffling off 5 of Professor Huang's books. They're in the back, so if you haven't had a chance to do so already, put your name down and put it in the jar to win one of his books, and I think he would be happy to stay around and sign those for those who are lucky enough to win one of those. Today's program is called The Second China Shock, and what we're going to look at, what Edo and Professor Huang are going to lead us in, is a discussion about China's overcapacity, specifically in the areas of electronic vehicles, batteries, and legacy chips. I'm looking forward to learning more about what we mean by overcapacity, whether this really is a threat to the United States or Western economies, and whether this is a feature or a bug of the Chinese economic system. So with that, I hope you'll join me in thanking Edo Campanella and Huang Yasheng for being today's speakers, and I'll hand the mic over to you, Edo, to get things started. Thank you, everyone.
Thanks a lot, Dan. Thanks a lot, Dan, for the kind introduction. I must say that Dan is a big China expert. He's fluent in Mandarin. He writes a lot about the US-China relations, so I'm pretty sure that he will contribute to our conversation later on. I want also to say hi to John Haig, who's probably watching us on Zoom. He was expected to be with us on the panel. He got some health issue at the last moment, so it's just me and Yasheng. I hope it will be enough for you. I prepare a few charts that should facilitate the conversation with statistics, especially for people who are not really into the debate about the second China shock. So Yasheng, I would like to start from this chart that basically shows the evolution over time of China global export share from the 80s until recently. As you can see, there was an acceleration during the first China shock that lasted until 2016. Then the red line, you should focus on the red line. Then there was a decline, a stabilization, and then it picked up again. And now it is stabilizing at levels that are above the peak of the first China shock. So that's why people are talking about the beginning of this new shock. It is puzzling because it is happening at a time when China is engaged in a trade war with the US and Europe. It is taking place at a time when China is trying to insulate its economy from the global economy through its dual circulation strategy. So, Yasheng, my question to you is, how do you interpret this later export boom? Is it the result of mercantilistic policies, as many people in the West claim? Is it more the result of macroeconomic imbalances in China?
Yeah. So first of all, thank you so much for convening this discussion and to invite me to participate in it. I think we need to distinguish mercantilism as a deliberate policy decision and mercantilism as a result of what is happening in global economy, in Chinese economy in general. And usually the way to tell the difference is to look at exchange rate policy. And I don't think the evidence is very strong that it's the latest round of whatever you call it, China shock, China overcapacity. I don't think the evidence is very strong that they are using exchange rate in a very deliberate, explicit manner to jack up the export surpluses. It's more, if we sort of think about exchange rate, both in nominal terms, in real terms, it's a little bit like the earlier period in the late 1990s when China began to export more and more to the rest of the world during the Asian financial crisis, in the aftermath of the Asian financial crisis. China didn't keep the exchange rate deliberate low to achieve that. What happened was that there was a deflationary environment within China in the late 1990s. And now you see exactly the same thing. So in terms of the real exchange rate, the Chinese real exchange rate has depreciated, right? Because the prices are declining within the Chinese economy. And that's increasing Chinese export competitiveness. And I would argue at the expense of corporate profitability and across the, so essentially you are achieving market competitiveness at the expense of economic competitiveness. And so there's that story. And the other story is the subsidies. The subsidies this time around, as Dan introduced, is focused on a key industrial sectors, right? Energy transition, EVs, and solar. Solar, they began to do that a long time ago. And the EVs and the batteries. So in terms of exchange rate, there's not strong evidence of explicit mercantilism. In terms of subsidies, it is not across the board subsidies, it is subsidies on a few economic sectors. You can call it mercantilism, but I feel more comfortable calling it industrial policies, right? So, but when you combine industrial policy with a general weaknesses in domestic demand, the result is what you see here.
So I would like to stick to this macroeconomic picture for a second, because I think it is important to understand what's happening behind the scene. So deflation is the result of very weak aggregate demand in China. Then you have these industrial policies that are boosting supply in a way. And there is a mismatch between the strength of the supply of the economy, the supply side of the economy, and the weakness of the demand side of the economy. The Chinese leadership is supposed to move away from an export-driven growth model towards consumption, but is doing nothing to stimulate aggregate demand. This chart shows consumer confidence in China that is at rock bottom. It's interesting because this statistic is published by the government, so it tells a pretty gloomy story. I don't know if they will continue to publish it in the future as they did with the youth unemployment rate. So why is the Chinese leadership so fixated with the supply side of the economy and not so much with the demand side?
Yeah, so this has been the real issue in the Chinese economic development strategy, which is that the China model, famous China model, is incredibly good at the supply side. And, you know, just in terms of manufacturing, in terms of scaling technologies, China is just incredibly capable. And not many developing countries, and even not many developed countries, are as capable as China. And there are deep, really, reasons for that, and we can come back to it. But the China model has really failed at the demand side, the domestic demand side. And there are two stories there, and sometimes they are complementary, sometimes they are contradictory with each other. The mainstream story among the economic discussions is savings rate. Right? But I don't think that's actually the main driver. It is a driver. It is not the main driver. The main driver is the what we call labor share of the income has declined substantially. So if you think about any economy, US economy, Chinese economy, Japanese economy, they're basically three actors, right? The government, the capital, and the households. The household share of the GDP in China has been declining substantially. It doesn't mean that the households are getting worse in terms of their income level because the growth rate has been positive. It's just that the household income growth rate has lagged the GDP growth rate by a substantial margin. So if you go back all the way, so your chart doesn't have the data for the 1980s. In the 1980s, the Chinese household income growth was faster than the GDP growth rate. And then in the 1990s and until today, the household income growth rate has been slower, much slower than the GDP growth rate. So, and then you couple this with a high savings rate, right? So we're talking about pensions, future expectations of retirement, childcare, healthcare, all these things. So you have declining share of the income, you have rising household savings rate. The combination of the two means that the domestic demand is not at where the domestic supply is. And then there was the COVID control. It's not COVID per se, because if you look around the world, every country experienced COVID,
Sure.
right? So US experienced COVID. If you only experience COVID, once you get a vaccination, once you get the public health under control, you typically see a dramatic bounce back of the economic activities. You see that in the US, you see that in Asia, you see that in Europe. You don't see it in China. And the reason is COVID control. The way that they implemented COVID control destroyed the consumer confidence. And the way that they implemented all these very stringent measures on commerce, on business, on household, I think this time around is really, really difficult for them to get out of that situation, the consumer confidence. It's not a short-term thing. This is a deeply psychological. And if you look at, say, population control policy, they lifted the one-child policy in 2015. They thought that they are going to get a bounce back to the previous prevailing fertility rate. That didn't happen. Psychology is something that is, once it is formed, very difficult to change. And this is something that autocrats don't quite understand because autocrats are not very good at psychology because they don't really need to depend on psychology. They think they can just issue commands to the companies, the individuals. On lots of things, that's true, but on something like this, right? Consumption, fertility, and a host of other things, commands are not terribly useful, right? And then, you know, if you don't expect whatever you say about the previous period, right? You know, I have been critical of the previous strategy. But whatever you said about the previous strategy, those strategies, the problems with those strategies never destroyed optimism in Chinese society. The COVID controls did that.
So we will get back to how to revitalize consumer confidence and demand later in the talk. I would like to stick a little bit more on this mismatch between demand and supply because it's really at the heart of the debate. This mismatch is leading to a huge overcapacity issue. This chart focuses on the three main areas of attention: solar panels, batteries, and electric vehicles. If you see the red line is China supply, the blue one is global demand. You see that the production capacity in China for these three sectors is way above not only domestic demand, but even potential global demand. So that's the fear people have in the West, that this overcapacity might induce Chinese companies to lower prices and push out of the market anyone else. And this problem is not only confined to these three industries, it's more generalized. So my question to you is whether we tend to think about our future and the impact that this has on our economies. But do you think this overcapacity issue represents a threat also to the stability of the Chinese economy itself?
Yeah, so this does go back to the earlier point that I made. China model is very good at one thing, right? Both in the economic sense as well as in technical and engineering sense, right? For a country to be able to go from, you know, from this level to that level in a short period of time, not many countries are able to do that. I mean, we have to give credit to China where credit is due, right? So just the hardworking people, the engineering skills, and the ability of the Chinese. You know, I work with some companies, and it's just amazing, right? The ability for the Chinese engineers to come up with the solutions to production problems. Um, you know, very often we think about innovations in terms of, you know, 1-0, but in reality, how to get from 1 to 100 is as challenging, and China is able to solve that problem. So we have to acknowledge that. In terms of overcapacity, so this is a more of a microeconomic way of thinking, right? At the product level, EVs, solars, and batteries. But as you said, the overcapacity is across the board. Overcapacity is a macroeconomic concept. It's not a microeconomic concept. And the issue, I think, the issue for China is both a economic issue and a geopolitical issue. So if you see a picture like this, imagine China is a country that the rest of the world trusts, right? In terms of the supply chain, in terms of the geopolitical intentions. This is a great picture.
Yeah.
Right? China is one of the few countries in the world that can scale, right? Can scale quickly. We need EVs, we need solar panels, we need batteries to solve climate challenges and engineer the energy transition, right? And that gap, you know, you could say that there's a gap. You could also say that the prices are too high. So once the prices come down, then the gap is going to narrow. This is actually a great development for the world. And it is very important to give credit to the Chinese engineers and Chinese factory workers for successfully scale the solar now all the way to the price of coal. right? Basically, solar now, if you look at the kilowatt generated by solar, is equivalent to the price of the coal. That's an incredibly impressive achievement. So we can't really talk about this without talking about the geopolitical complications. The problem now is that the rest of the world doesn't trust China, right? So what if you establish this dominance and then you withdraw the supply from the rest of the world as a way to achieve your geopolitical goals and projects? I think that's the fear, right? So it's not a, I mean, there are economic fears too, right? Unemployment and other countries want to also go into that industry. But I would argue that the geopolitics is the single biggest factor. The other economic considerations, okay, so if economics is the only thing you think about, then you should increase your competitiveness, doing the things that Chinese are doing, right?
Yeah.
Subsidies and you know, training the workers and you know, at MIT, there are tremendous amount of hard tech technologies that can be scaled if we have that capability. And US has been just incredibly productive in terms of coming up with new technologies, but we have this poor ability to scale, right? Yeah, if we want to do that, we need to solve human capital issues, we need to solve financial issues, but these are economic concerns, not geopolitical concerns.
And I think it is important to emphasize the key difference between the first China shock and the second China shock.
Sure.
The first China shock was really about the export of low quality, low value added goods, whereas now China is basically competing with the US and Europe for markets of more advanced goods. What's also interesting is not that China is moving up the global value chain, but is also producing goods that are even of higher quality than what American companies can do, for example, when it comes to electric vehicle. So my question to you is, China didn't become a green tech giant overnight. It was a long process. They started to focus, for example, on electric vehicle already in 2001, whereas in the West, we started just recently. So how can you, in your book, there are 2 chapters about the the innovation system in China. Can you explain us how state intervention and innovation can coexist in the Chinese model?
Yeah, so I'll get to that very quickly, but let me talk about what we have failed in this country, right? So if you look at the battery, for the electric vehicles, the early versions of the battery technology, they were all invented by the US scientists, including one by the MIT professor, and he founded a company called A123. A123 failed in the United States, failed to scale. For GM, we didn't develop the technology to an industrial scale. And then the technology was sold to a Chinese company at very low price, which is, you know, not surprising because you are not really commanding returns on your technology. And then the technology is a very good technology. And China has taken away that technology to scale it at an incredibly impressive level, right? So, and if you look at the solar technology was again invented in the United States, not invented by China. And US invented solar technology in the late 1970s. President Jimmy Carter installed solar panels on the rooftop of the White House. When Reagan came in, he took off the rooftops, right? So I just don't feel that we should blame the Chinese for successfully producing things that we gave up, right? And it's just, you know, we can, you know, talk about why we failed, but I think acknowledging that history is as an economic discussion. I just think that China, you know, you can criticize subsidies and all. There's a particular way to criticize subsidy, and I can come back to that. But I just don't think that's a very convincing argument against China, right? The real issue is that we need to do better. We need to compete with China on better terms. In terms of the quality, you're absolutely right. But quality is learning by doing. If you don't do it, you don't learn how to improve quality. In this country, we haven't built nuclear power plants for years and years. And it's just very difficult to build a nuclear power plant once you have given up on the know-how and the experience and the skill to build a plant safely, whereas Chinese have continued. So I have no complaints about, maybe in part because I'm Chinese, so I'm biased. But I really, on economic grounds, I don't blame the country, right?
If I may, I want to bring the Chinese perspective on the overcapacity issue, because it's a very blurred concept. Overcapacity can be due to just temporary factors, cyclical factors, some demand weakness due to many reasons. It can be something structural if, for example, the government is pushing companies to overinvest in certain sector, but it's very blurred. But I would like to bring the Chinese perspective and how they are pushing against this argument of overcapacity. The Chinese say that they are exporting around 15%, for example, focusing on cars. The Chinese export around 15% of their production. The remaining is absorbed domestically. Germany exports 80% of its cars, and only 20% is absorbed domestically. When we think about German exports, we say they are the product of comparative advantages. When we think about Chinese exports, we in the West say this is the result of overcapacity and unfair competition. So do they have a point? Does the Chinese government has a point in this argument?
Sort of, I would say that China is a continental-sized economy. It shouldn't be compared to even a economy as big as Germany. I'm not precise about 20 vis-a-vis 80%, but my point is that there's no convincing good economic reason for me to think about China as a continental-sized economy growing at 8% a year, 9% a year for the last 40 years, not being able to absorb the majority of the production capacity that you have created, right? So if you look at the export share, export plus import share of the GDP, China's share is much bigger than the US, another continental-sized economy. And but the reason is not surprising. US, the domestic consumption as a share of the GDP is much higher than China. So I think as a policy, as a domestic policy issue, if I see that the Chinese households' income are rising, their consumption is rising, the government provides adequate social protection, then you end up 20% of the export, then that's fine. That's just the natural kind of a result of the combination of these factors. But the problem now is that we don't have the evidence that the Chinese household income is rising. We don't have evidence of high consumer confidence. We don't have evidence that the Chinese households feel secure about the future. And then we do have evidence that the Chinese government is supporting these industries at a substantial scale and level. So this is where I would quibble with that official explanation, right? You can get exactly the same percentage, but the way you arrive at that percentage is quite different.
Yeah, no, I fully agree. And talking about potential solutions, you mentioned this idea of household income that are not rising enough, consumer confidence remains very low. So one way to absorb part of this overcapacity is to stimulate demand, as we were saying. What are, in your opinion, the key reforms that Beijing should implement first? And second, related to that, how realistic is it is that they will do?
Well, the second one is much more difficult to answer than the first one. I think the one option is to accept lower GDP growth rate, right? So there's a way to absorb excess capacity, which is that you just accept lower GDP growth rate. But nobody likes that. Chinese leadership doesn't like that. The other way to solve, not solve, but at least reduce the degree of this problem is to repair the relationship with the West.
Yeah.
So we haven't kind of talked about this. We talk about geopolitics in very vague and abstract terms. This is a big difference between the current leadership in China and the previous leadership in China. The previous leadership of China had the China model, so the supply was bigger than demand and all of that. They understood that gap. Then they said, okay, we got to keep very good relationship with the West, with the United States, with Europe, with Japan, because they are our customers that can absorb that overcapacity, that gap between supply and demand. And Xi Jinping came into power with a similar gap, right? And arguably, he hasn't really solved that gap, and he probably has made it even worse. But the big difference is that he doesn't quite see the West as a solution to that gap. And we can have a discussion on who is to blame for the deterioration of the relationship between U.S. and China. But there's no question that he has played a role, right? So here's the economic issue, right? The economic issue is that you have the China model that's very good at growing the supply, but not very good at growing demand. Then you need the demand elsewhere, right? The previous leadership understood. So the domestic demand is not coming. We need to depend on the foreign demand. The current leadership has exactly the same model as before. There are some changes, but the same model as before. But they impair the relationship with the West, undermining the trust and the goodwill of the relationship between the two countries, and creating a lot of problems for Chinese exports, right? Trump tariff, Biden tariff, and if Trump comes back, the tariff will be even at a higher level. And this is not just America. Europe is doing the same thing, right? So I go back to the earlier point that I made, which is that if you are a trustworthy trading partner in a geopolitical sense, this is actually a great picture that you are in, right? So you can focus on other things and you can compete with China through commercial policies. But the problem now is the geopolitics. I think that's the problem that limits how realistic the solution is going to be. But the third solution is increase the income of the Chinese households. And we're not talking about transfers. So there's discussion in the media about Chinese government making transfers. The problem with the transfer idea is that when you make a transfer, you have to tax somebody else. Yeah. Otherwise, you don't have the resource to transfer. The way I think about this is that going back to the three-actor model, you have government, you have capital, you have household. The way to solve that problem is to reduce the size of the government, right? Then you don't need to tax the capital sector. You don't need to tax the household sector to make that transfer, right? You reduce the size of the government, relieve and release the resources to be transferred to the household, right? That, it's not going to make the overcapacity go away, but that's at least going to lead to some reduction of the problem.
But something that probably will take many years to happen.
So that's why I believe that the first solution is more likely, which is a slowdown of the Chinese GDP.
Okay.
I don't see any, in the best case scenario, I don't see how you can avoid that.
Yeah, and also repairing the US-China relationship or EU-China relationship. Yeah, it's something that takes time. Probably we are not in there isn't the right geopolitical mood.
I think the trust is no longer there. That's the problem. Even so, there's evidence that the Chinese government is now trying to repair the relationship, but the trust is not there.
One pragmatic solution, tell me what you think, could be the following. The first China shock was really about technology transfer from the West to China, forced technology transfers in many cases. Now we are in a situation where China is technologically more advanced than Europe and to some extent the US in some areas. Would it be possible to think pragmatically about the problem of overcapacity and say, okay, why don't the American government, European governments try to attract Chinese companies so that maybe they might hurt their national brands, but at least they limit the impact on their labor force of competition with China. And maybe that could be also a way to control more what the Chinese companies produce and regulate them a little bit more. That is somewhat, to some extent, what happened in the 80s when Japanese firms moved their production to the US, and that contributed to ease tension with the Americans.
But here's the big difference between Japan and China, right? Japan was an economic competitor with the US. It was never a geopolitical competitor with the US. Japan was an ally with the United States. So essentially, US solved the Japanese trade deficit problem by reducing the goods coming from Japan, but increasing the capital coming from Japan into the United States. Right? Honda established a factory in Ohio in 1987. Toyota established factories in California, in Alabama, and those states. Now the discussion, essentially this is a normal way to solve the trade problems. You impose tariff on trade, and then the capital moves, right? Goods don't move, capital moves. If China is like Japan in geopolitical terms, that is a realistic solution. But now the Congress and the media, all the discussion is, oh, there's going to be spies coming from China dressed up as factory workers. They're going to install cameras in whatever places, you know. So I go back to my earlier point, the trust is not there.
Not there,
So once you don't have that trust, everything the other guy does, you are suspicious, right? And do I think that there's a realistic scenario for Chinese manufacturing entrepreneurs to install surveillance? No, right? You know, but how can you argue against that when you don't have the trust?
But this lack of pragmatism on both sides, particularly on the West side, will have enormous implications because it means that American consumer, European consumer will not have access to the best products, to the cheapest one.
It's actually worse than that.
And you will slow down also the green transition.
Yeah, so you slow down the green transition. You deprive the consumers of, you know, quality products from China. You actually don't increase your domestic production capacity as fast as you would otherwise. Because as you pointed out, a lot of these Chinese companies have the business knowledge and production knowledge, production know-how, production skill. You cannot go to a university to study how to do manufacturing. You kind of have to learn from the people like close by, right? I learn from you, you learn from me. We work together on these production issues, right? When you segment production from the market, you don't achieve that learning effect. If you look at how China was able to scale, China got a lot of help from Taiwanese companies, Korean companies, and Japanese companies, because those companies invested heavily in China, right? Joint ventures and wholly owned enterprises. Capital, scholars tend to think about capital not in terms of money. Scholars tend to think about capital in terms of know-how and technology, right? Money is really secondary because you can raise money from banks, from stock market, but know-how and technology, you can only learn from other human beings, right? So we are depriving ourselves of the access to the critical know-how and knowledge that are now the Chinese, that are controlled by the Chinese. Right?
So one last point, and then we open up the floor for the debate. The policy debate until a few years ago, the global policy debate, was dominated by economists primarily. Yeah. Now, I don't know if it was good or bad, but now it is dominated by national security hawk. Yeah. Yeah. I want to show you this quote from Khrushchev. He said that even a button can be a strategically important material, because if you don't have buttons, soldiers need to hold their pants and they can no longer hold their weapons. So my question to you is whether our obsession for this national security threat is always justified or not. Do you think, for example, solar panel poses a serious national security threat or not? Batteries pose a serious national security threat or not, and so on and so forth. The feeling is that what was supposed to be a small yard with a high fence is actually not that small. So what's your opinion? I mean, you have a couple of minutes. It's a long question, but I want also to give time.
Yeah, I'm not sure about button, right? But
yeah, you don't go back to Khrushchev, but on the yard.
I think on other products, I don't really think that, you know, on the ones you listed, solar panels, and they themselves don't pose direct national security threat. But I do believe that depending on one country, and depending on one country whose government is very opaque, whose government policymaking we don't quite understand, that does have, if not national security implications, it does have other kinds of implications, right? Economic implications and commercial implications. So, you know, solar panels, right? So, you know, like EVs need to be serviced, and the software needs to be updated, right? Autonomous driving needs continuous information, constant information. So you can drive an EV, you can drive an autonomous vehicle, but then without a constant supply of the data, you may not able to drive it anymore, right? So so again, we go back to this trust factor, right? Yeah. So you have to trust the supplier to keep the commitment, to honor the supply contracts, and not to use your dominant commercial position to achieve goals that don't have much to do with economics and commerce, right? So in that sense, right, I don't think depending on one country so overwhelmingly is a good business consideration.
Thanks a lot, Yasheng. It was a fascinating interview. Now I pass it on to Dan.
Thank you, Edo, and thank you, Yasheng. Fascinating conversation. I'm going to make one comment, ask one question, and then I'm going to throw it open to the audience. Yasheng, you talked a lot about trust and the need to build trust. I would just add to that also the need to evaluate your own self-confidence, the confidence in your own domestic systems to provide protections, I think is a very important issue. Let me ask Yasheng and Edo, I want to there's a spectrum of thinking about these issues. On the one hand, a narrative that's dominant in the West, essentially when we take something like electric vehicles, is China cheated. They forced technology transfers. They used huge government subsidies to create overcapacity, and we're all suffering because of it. On the other end of the spectrum, the narrative you might hear when you're talking to a Chinese government official is China simply outcompeted us. They are innovative, they have scale, and we got beat. Where do you put yourself on that spectrum? On the specific title of, let's specifically talk about electric vehicles. What were the roles of tech transfer, government subsidies? Obviously, both of these things are true. So, you know, I'm asking you a little bit of a trick question. And then the follow-up is, it strikes me that so recently the words industrial policy were dirty words in the United States, and now we're seriously talking about industrial policy. How has China's decisions in this regard pushed the United States, pushed the West to think differently about industrial policy?
So if I may start with the first one, I think it's important to make a point that the West should blame itself to some extent, because we were late in realizing the importance that certain technologies would have played. When it comes to Europe, for example, we are very good at regulating, but we are regulating other people's technology. So that's a problem. So we want to push for the green transition, but China is leading in the development of green technology. So I think for sure competition with China is not always fair, but I do believe that the West made major strategic mistakes. And on industrial policy, very quickly, I think it's important, it's good that there is a rethinking of the role of industrial policy, because, for example, when it comes to new industries, the so-called infant industry argument, the state can play a major role in activating a virtuous cycle to boost certain kind of industries.
So I think the industrial policy view that we used to have was too simple and too naive. We used to believe that the only science required government support, right? So National Science Foundation, National Institute of Health, and because the commercial applications are not that clear, these are public goods. And we kind of, if you read Peter Thiel's book, From Zero to One, he was very dismissive of a country like China to be able to scale from 1 to 100. He said, this is just imitation, and Silicon Valley is really about creating from 0 to 1. We know from experience to scale from 1 to 100 is actually extremely hard. It's extraordinarily hard. And so I would argue that the previous thinking about industrial policy was wrong, was so narrow, without thinking about how to scale, and that requires government investments as well. On the two polar explanations that you posed, Dan, I think on those products, I'm more close to the Chinese side of the issue. On those, like EVs and solar panels, maybe not on other products, but on those.
All right, we're going to go to audience questions. When you do get the mic, please briefly identify yourself and make sure that you're asking a question. No long statements, please. We're going to start with you.
Thank you both for the insightful discussion. My name is Sam. I'm a second-year MPB student here at the Kennedy School. I have a question about China and a question about the United States. So for China, you mentioned that one strategy would to repair the relationship with the West. But I'm curious whether China is playing a longer-term game by building relationships with the rest of the world, including the emerging markets and developing countries, and potentially in the future exporting to those markets instead of relying on the West. My question on the United States is that a barrier to building that workforce in the US is the role of unions. So the reason we are seeing, for example, Tesla is the only viable EV maker in the US is that it doesn't have a union as of yet, but potentially will have a union as well. So thinking about building that know-how, building that workforce that can learn by doing, what should we do about unions in the US, especially the Biden administration or the Harris administration is trying to build up unions while at the same time trying to build up that domestic manufacturing? Thank you.
So I definitely hope there's going to be a Harris administration, and maybe you know something we don't. So we answer together or individually?
I think we can answer them one by one. So perhaps both of you could comment as you like.
Oh, okay. So on the union issue, I don't know as much about this topic as I should. On the question of long game, that's going to be a very long game. And as a famous economist said, that we die in the long run. And the developing. There is that narrative that China is building the global South, right? The BRICS and all of that. The BRICS share of the GDP has increased. That's true, but much of that increase was Chinese increase in the global share of the GDP. Russia's GDP is what, $1.7 trillion US dollars, and that's basically a Guangdong province, right? So, okay, so you you increase your relationship with Russia, and U.S. economy is like 20 trillion, something like that, and the U.S. Imports are several multiples of the Russian imports from the rest of the world. So I can make a convincing argument that you develop good relationship with global South, you maintain a good relationship with global North. I don't really see the economic rationale to give up the good relationship with global North and then improve the relationship with global South. Global South is going to be a resource story rather than a market story, as we know from Belt and Road program. It is going to take your resources rather than providing market opportunities. It is draining your resources rather than, I have nothing against global South, absolutely nothing against global South. But in terms of economic picture, we just have to get it right? The global North, Europe, US, Japan, South Korea, these are the main demand for the products that China is producing. The global South may get there, but it's going to take decades and decades.
Yes, I don't have a strong answer on the union either. On the other point, I think it is important to emphasize, I don't know if you agree on this or not, that the deterioration in the US-China relation is more about decisions that were made in DC, and then what happened next is just a reaction to that, including the fact that initially, when the Trump administration was in place, Europeans wanted to preserve a relation with China. Yeah. Then they were forced to take a side. And that has contributed to a further deterioration in the relation between the US, Europe, and China. So I believe that probably if you want to rebuild these relations, you should start to focus on the areas where you have common interests, and probably global commons are the solution. It's probably the only area where you can start to rebuild this trust.
No, but in 2017, Europe, faced with Trump presidency, really wanted to cultivate good relationship with China, right? China was viewed as a defender of globalization, and China had the excellent opportunity to take the global leadership in 2017 when Trump was moving in the other direction. The Ukraine war changed all of that calculation, right? So if China doesn't support Russia, if China supports Ukraine, that may not be sufficient to repair relationship with the United States. But I'm not European, but definitely that will go a long way in terms of repairing relationship with Europe.
So we have a question online from our co-director, John Haig. Claire, if you would read that, that would be great. And then we'll move right over to you.
I tend to think like an economist and a businessman. To start, there is the overcapacity Edo outlined. When combined with the large fixed costs capital investments in these industries, subsidized by the Chinese government, and the fact that these Chinese firms faced marginal costs that are quite low, the result is that markets can become very destabilized. Firms in this situation with embedded capital can limit pricing just below the much larger marginal cost of newer firms who must make the investment in capital and gain scale to gain share and limit competition. This may have significant economic and geopolitical ramifications for the stability of global markets and the issues of trust highlighted, depending on how firms and governments behave. If you were Xi, what would you do? If you were the US president, what would you do?
I let you play the role of both.
Which one? No, I think, so this idea that, you have the cost advantage, either average or marginal, then you dominate the world. That's actually true of many situations of many countries. Right? U.S. is absolutely dominant in many. I mean, this is why U.S. is able to exercise this incredible power over TSMC, over global semiconductors, even though U.S. doesn't itself produce a lot of semiconductors, software, right, design, and all of that. So as an pure economic issue, that's what you get, right? China, 1.4 billion people, incredibly capable workers and engineers and excellent skills. It's not surprising to me that they dominate in certain industries. I think that really the issue is that does the rest of the world trust such a supplier to supply critical technologies, critical goods to the rest of the world safely, reliably, and in geopolitical neutral terms? We can also criticize the U.S., right? U.S. is using the dollar system to go after Russia and maybe in the future go after China. But on the Ukraine war, unless you want to go directly a war with Russia, using these economic instruments, to me, is not a bad idea, right? You don't want to fight a war. So then we're talking about the legitimacy of the issues over which you use the economic weapons rather than using the economic weapons per se. So I don't think this is automatic, right? The economic as Khrushchev said, right, button and pants. China absolutely dominated those areas, right? So that's not a problem.
So if we start protecting also buttons, it means that the yard would become very huge.
Yeah, I mean, it is just right. Economics of innovation, economics of production, economics of manufacturing all tell us that there is a greater returns to a cluster of economic activities. So that's why New York is New York, San Francisco is San Francisco. At the country level, it's exactly the same, right? China is very good in certain things. US is very good in certain things. Japan is very good. Dutch are very good at producing the laser printer, the machinery, the DUV technologies, right? So I just don't think the concentration itself is the problem. It's whether or not you trust that country.
Yeah, and if I may react very quickly, I think just to answer John's question, I think if you feel to be behind in a certain industry, if you feel the price competition from China, I do believe that some degree of protectionism can, and if you think that these industries are strategically important, I think some degree of protectionism is acceptable, but it only allows you to buy time, because in the long term you will outcompete China only through innovation.
So I agree with that, but only on the following condition, right? Which is that, in fact, it is a little bit unnatural for the hard tech technologies to be invented in the US, but not to be deployed in the US, right? So usually technologies and knowledge don't go very far, right? So we ought to see hard tech technologies to be deployed first in the United States, because US invented a lot of these original technologies. So we need to examine the record and see where we did wrong, right? And we failed to deploy these technologies. That's not true of data. That's not true of software. That's not true of many other technologies. So it would be good for Kennedy School, for MIT, we collectively look at this historical evidence where we didn't do it right in terms of deploying the technologies at home.
All right, we're up against our time limit, but I want to get in 2 more questions. So we're going to go here for a question, and directly after, Andy, I'll give the mic to you for a question, and you can answer one or both of them after both questions are asked.
Hi, my name is Teresa, and I'm a first-year MPAD student here, and I'm also from China. So it's kind of a mutual agreement that China is prioritizing geopolitical standpoint over its economic development. So would you think, first question is, would you think the two thing like geopolitical standpoint and economic development is contradictory, or they need to sacrificing for each other? And my second question is, if for the best interest of China, for the Chinese people to prioritizing which one of them, and would it for the best interest of the world to see which one is getting prioritized?
Okay.
Hi, Andy Collier. I'm a senior fellow at the Masavar Rahmani Center. Arguably, China's in a structural decline that's going to go on for a long time, and there's a number of impacts that might happen. One is the consumer confidence that you mentioned impacted by COVID. Arguably, the property sector decline is even more important because that's the largest form of savings for most people.
Yeah.
And that's going to be a long-term issue. And obviously, the debt-fueled growth, 350% of GDP, the deleveraging could go on for decades. So the second question is, given these constraints, the supply production is likely to be curtailed at some point because there are certain state firms that can get money and many others that cannot. And certainly the private firms, Alibaba and some of the others, are going to find it harder to get capital. So sometimes I kind of wonder, why do we worry? Because I think this will just solve itself because China will dwindle to its a much lower state of economic development.
All right, Yasheng, Edo, you can take on one or both of those questions as you like.
Yeah, I'm happy to take that question, but also I want to answer the other question as well. Yeah, so I think this is a very interesting way of looking at things, which is that is Chinese economic success result of industrial policy, or Chinese industrial policy is a result of economic success of China? Despite what I just said, and I actually believe that it's more the second scenario. It was the real estate boom that created all these possibilities and resources that the government then deploy in the form of industrial policies, subsidies, rather than these policies creating economic success. The fact is that when China went big for these big push programs, the Chinese productivity began to decline. The productivity growth began to decline, exactly the opposite of what we would have thought to be the case, right? Because you increase technology, you increase science, and productivity should accelerate. I do believe, whether or not it's going to solve its problem in time is a separate issue. The reason is not because of the economics, just economics. The issue is because the government there has such an amazing capacity to direct resources. So even when you have slowdown of the economy, you can still persist in a very costly industrial policy program for a period of time, right? But the evidence is actually very supportive of what you just laid out. Now they are curtailing a lot of these subsidies and support and the bank credits now because the economy is slowing down. In terms of the geopolitics and economics, as a average Chinese person, I would definitely privilege economics over geopolitics, right? So, taking back Taiwan, how does that increase my welfare? I just don't see it, and so I think the government should privilege economic development, not just because China fundamentally is still a developing country, right? So Chinese aggregate GDP is big, it's second largest in the world, but per capita GDP as a ratio to the United States. So aggregate GDP now is maybe 65, 70% to the US aggregate GDP. Per capita GDP is only 25% of the US GDP. In the book I'm finishing, I also listed a separate statistics. If you look at the household income, right, 就是家庭收入 household income relative to the U.S. personal income is only 8% of the American personal income. China fundamentally is a developing country. Even if you believe these geopolitical goals are incredibly important and valuable, okay, try to strive for those goals when your per capita GDP is, 80% of the US, 90% of the US. And let's remember, when Japan reached its peak relative to the US, Japanese GDP per capita was about 70%, 75% of the US per capita. China is aggregate GDP. So to say that China somehow is like Japan in 1991 is just total nonsense. China is nowhere near Japan in terms of the level of economic development, right? So this is a fundamentally a very successful developing economy. Successful developing economy, being able to grow 8%, 9%, incredible production capacity, amazing things that they have done. But let's be realistic. This is a fundamentally a developing country that requires years and years of economic growth in order to improve the welfare of the Chinese people.
So I think Yasheng's answer were pretty exhaustive, and consider that we are short of time and we have a lottery, so I think I can pass my answer. The only thing I would like to say in regards to the geopolitics and the economics, I'm not sure whether you can entirely reconcile them. And you need to look at the problem from probably a global perspective, because if you perceive the geopolitical environment is not safe for you, you will have a tendency to produce as much as you can internally. And this is true not only for China, but it is true also for the US, for Europe. And this will create redundancies globally, inefficiencies, because you will not necessarily produce certain goods where it is the most efficient place. So the two things, economics and geopolitics, cannot be fully reconciled. And I think you need to look at it not just from the perspective of a single country, but globally. And geopolitical fragmentation that leads to geoeconomic fragmentation inevitably implies inefficiency. And so the two things are not cannot be easily reconciled, in my opinion.
All right, incredibly important conversation that takes into account some trends that aren't going anywhere, right? We talked about Chinese overcapacity in terms of cement and steel, batteries, EVs. Next up, maybe semiconductors. We might be here a few years from now talking about airplanes, right? And some of the geopolitical tensions that we talked about, it's hard to predict, of course, but it's hard to imagine those going in a very positive direction in the next few years. So some of these trends are going to be longer term. Please join me in thanking Yasheng Huang and Edo Campanella. I also want to thank our tremendous audience online. And as I said previously, if you're interested in this type of work, please take a moment to stop by our website, follow what you do. And if you're here in person, stay around for 2 or 3 minutes because we will draw some names to get some of Yasheng's book.